If you're sitting on a lot of equity in your home, listen up. There's something smarter you can do than just selling it. Let me explain. Seller financing or owner financing is when you, the seller, actually play the bank. Think about it like this. When you buy a house, you put a certain amount of money down, and then the rest is actually a loan from the bank at a specific mortgage interest rate. In this scenario, instead of the bank lending the buyer the loan, it's actually you, the seller. You replace the bank. Instead of getting a lump sum payment, the buyer pays you over time with interest. Why would you do this? For one, you get steady monthly cash flow. If you are either looking to semi-retire or leave a W-2 job to start your own business or become a stay-at-home parent, this gives you predictable income you can rely on. This only works though if you don't need the cash immediately. The second benefit is that you defer capital gains over a number of years versus taking a hit all at once in the year that you sell. This is because seller financing is reported as an installment sale. Instead of paying tax on the full gains up front, you are taxed proportionally as payments come in. The big thing to note here is that the interest that you receive on the mortgage does count as ordinary income and will be taxed appropriately. What that means is if you anticipate your future income to be lower than it is right now, seller financing is a great option as it can reduce your tax burden later on. So if you think that you are making more money now than you will in the future, so again, you are going to semi-retire, potentially be a stay-at-home parent, or starting your own business, which means it may take some time to ramp up, seller financing is a really great tool. If you are in a lower income bracket later on, you will get taxed at a lower rate. So all the interest that comes in that gets taxed as ordinary income is now going to be taxed at a lower rate. Big note here, I'm not a CPA. I'm sharing this information for educational purposes only. So make sure that you talk to your CPA or your licensed professional about how this impacts your individual taxes. Third, and the biggest benefit here is that you get to set the terms. This is your loan that you are creating. You can absolutely change it from the normal structure of what a bank offers. So a bank might offer a traditional 30-year mortgage at a specific interest rate. You can decide that instead of a 30-year mortgage, you instead want to do a 20-year mortgage at a lower interest rate, but the selling price is going to be a little bit higher. There are different ways you can structure the loan that works best for you. Since you are the one who's creating the deal, everything from the purchase price, the mortgage interest rate, as well as the length of the loan term, they're all negotiable. They're all in your control. Having a great realtor is important here because they can help you craft the best scenario for you. Oftentimes when mortgage rates are really high, that can actually work in your favor as you can offer a slightly lower mortgage interest rate than the bank and potentially call the loan to be due sooner. So if you know that somebody does not intend to keep a 30-year mortgage and the buyer instead maybe is looking to keep it for 20 years, you can write the terms to say that you're going to give a slightly lower mortgage interest rate in exchange for the balloon payment or the remaining of the mortgage to be due in 20 years versus 30. So there's definitely ways that you can play around with it. The other thing to note here is that while you may be sitting on a lot of equity, in order to sell your home, you may still need to put up some additional cash. So you do need to make sure that you have cash on you in case you do need to put more dollars up front in order to properly do seller financing. There are other situations of seller financing where you can be secondary on the loan and the person still takes out a mortgage with the bank. Going that route is a bit riskier than what I'm talking about here. I can talk about it in a separate video if you're interested in that. Like I said, this isn't for everyone, but if you're equity rich and you're patient and you don't need cash now, this can actually be a really powerful tool. Like this video, follow me for more real estate investing tips.